Alright, guys, so let's dive a little deeper today. Now, quite a few things are happening simultaneously, and this goes beyond just the rare earth squeeze that everyone knows by now. The cuts have already started, and we are witnessing a 31% decline in September, and this is the third monthly decline of rare earths, and it's even lower than the levels in April. 94% of rare earth magnets are made in China, so US industries, including EVs, military systems, and chip makers, are going to feel the pain. In other words, Beijing is squeezing critical US industries, so either costs will rise or production halts, they are coming. Now, that is the supply chain squeeze happening. The EU calls it weaponizing supply chains, but we are in a trade war, so everything and anything that has leverage will be weaponized. Everything is fair game. US exports to China are dropping, but Chinese exports to America are also collapsing. Now, a 30% drop is no joke, and Beijing is truly ready for this decoupling to be complete. Now, this is the prevailing sentiment in China. They are truly fine with losing the entire US market in a worst case scenario, and on these, they have an iron resolve.
Yeah, and China will lose the US market, which, as I've said, is 15%.
We don't
You
care.
can't.
We don't care. China has been here for 5,000 years. Most of the time, there was no United States, and we survived. And if the United States wants to bully China, we will deal with the situation without the United States. And we expect to survive for another 5,000 years.
A supply chain squeeze is bad enough, but China is also trying to cut away investment money into US industries. Now, the agenda of the entire trade war is to re-industrialize the US, and this industrialization is getting foreign companies to shift production to the United States. Let's not get this twisted. For countries like Japan and Germany to uproot their factories away, to go from Wolfsburg all the way to Arizona in order to access the US market. But now China is making things harder. The Trump administration just gave Beijing a warning: don't penalize or punish companies looking to invest in the US. And this panic directly stems from China sanctioning the US units of a Korean shipping giant. Now, this is the classic sanctions move perfected by the US. Chinese companies will be barred from transactions with Hanwha's US units, basically to starve their US branches of Chinese business and supply. That's after they realized Hanwha had plans to invest in the US maritime sector. As a result, their stock price crashed by nearly 6%. And the US trade team is furious. This all circles back to the battle for global ports and heavy shipping. Now, both China and Trump, they are squeezing each other's ships for money to crush each other's exports. The Americans know they don't have a shipping sector anymore, so they are inviting the Koreans to build everything from scratch. But as we said before, the reindustrialization of America will be done under fire. There will be broken glass and barbed wire every inch of the way. It will not be easy. And let's look at the Chinese perspective. The majority of global trade is still done shipping stuff on ships. And whether it's container cargo or barrels of crude oil, you need vessels to get the job done. Over the last 2 decades, China's shipping industry has exploded. In the past, the majority of vessel deliveries were dominated by Japan and Korea. They own over 90% of the market, but China's industries have caught up. Now, over half of total new ships sold are Chinese vessels. The US doesn't even register on the charts at all. This gives Beijing enormous geopolitical leverage against the US as well. It's not just about the money, guys, it goes beyond that. It even goes beyond transaction and selling outside the dollar. Now, China has pumped over $100 billion to subsidize their shipping sector over the last 5 to 10 years. And it's all about getting the world hooked on Chinese vessels to build maritime dominance. Now, you combine this with their portfolio of global ports, it's a wrap for the US if Trump does nothing. And here's what we mean. Since the Russia-Ukraine war, new orders for Chinese vessels have gone through the roof. Shouldn't be a surprise. China benefits from all the cheap energy flowing from Putin's economy. So Chinese industries can compete even more effectively. Big shipping companies need to save on costs. Shipping is a razor-thin margin business, so they go Chinese. And now that we have a global tariff war, cost savings are even more important than ever before. More than a third of global vessels today on the high seas are Chinese made. And this is an important point. The US cannot afford to sanction or punish a third of global container trade. It will backfire badly. Exporters will either choose not to sell to America, or US consumers will have to absorb the port levies, the port fees on their end, which means higher inflation for the man on the street. Now, China understands this and their plan is to keep their dominance. So they're trying to prevent the US from regaining a foothold here. Now, is this ideal and playing nice? No, it isn't. But it wasn't China that started this economic confrontation. I'm just saying. Trump himself has admitted that US shipping has been decimated, and there is a mad rush to restore that industry, not through domestic investment but through foreign money and expertise.
This massive investment will go toward building out shipping logistics, infrastructure, and terminals, which will create an estimated 10,000 new jobs in America. It's so important because it's about shipping. You know, we lost our way for many years. We haven't done anything. We used to build a ship a day, and now we essentially don't build ships. We're going to start that, and we're going to be announcing next week or the week after a massive new program for building very large, the largest ships in the world.
So we can expect China to suppress the US shipping industry, probably indefinitely, because it's just that important. But let's move a bit towards the EU and Russia because things just took a wild turn. Now, we probably saw what happened a few days ago, another meltdown between Trump and Zelensky. Not as bad as before, but Trump gave him a warning. Putin will destroy you. That Ukraine must accept the Russian peace demands, and the people most affected, surprisingly, or maybe not that surprisingly, were those seated in Brussels. American aid to Ukraine has more or less stopped. At least the big amounts are halted. American weapons today are being bought by NATO and Europe for Ukraine. So it's mainly very transactional now. But the idea of sudden capitulation to Russia is setting Brussels into a tailspin. And now we have this weird 12-point proposal to end the war. Basically, it's another attempt number 435, to trick Putin to surrender. But focus on this clause. If Russia accepts, which will be wow, the frozen assets won't even be returned in full. 300 billion will still be left in limbo unless Moscow agrees to contribute towards Ukraine's post-war reconstruction. EU sanctions on Russia will eventually be lifted as well, because honestly, the Europeans need Russian commodities more than anything else. So this is just a cop-out here. But this situation is just a reminder that holding assets in the West is risky. Financial reserves can be weaponized against you, and once it's gone, there's very little recourse left. But will Russia fall for this? Definitely not for the reserves because their war chest is still quite full. Trade with China and BRICS allows Putin to essentially fight forever. The Russian economy is nowhere near collapse just yet. According to the IMF and Russian data, reserves are still near the $600 billion mark. Most of it today is in the Chinese RMB, Chinese bonds, and other allied currency assets. But look at Russia's big shift towards gold, especially after 2022, after the brutal confiscation. They have over $200 billion in gold, and that's probably underdeclared as well. In percentage terms, 35% of Russia's total reserves are in physical gold bullion. And this is the level and speed of de-dollarization here. Euro assets have also been dumped. That's the problem with the 12-point proposal. It's still unrealistic, especially the financial portion. Russia is willing to walk away from the 300 billion because the end goal is not about the money at all. For Europe, this is another own goal, and the World Cup haven't even started yet. It's just double confirms to the world, especially to BRICS, that asset diversification is important. Yes, the dollar and euro has the deepest markets with excellent liquidity. Everyone knows this by now. But when you get on their bad side, try getting your money out. You'll get 1,000 excuses, but not the money. Now let's talk a bit about gold's big plunge yesterday because people are starting to panic and we have to be objective about things here. No asset class in the world can go up in a straight line forever without massive corrections. We have seen big plunges in US stocks, Chinese stocks, and of course in crypto as well, Bitcoin. Now, gold has gone parabolic over the last few months. In fact, it has gone wow over the last few weeks. Trump's tariffs pushed it over 3 grand. Then we had the perfect storm hitting the world, and that sent it above $4,400 at one point. Now, three main things were driving gold prices higher, and we gotta understand them. Now, the first is the US China re escalation. That sent panic because the US government will need to spend tons of money to rebuild supply chains. Then we had the US government shutdown. This cast doubt on the entire system itself. Next was the Federal Reserve. Their rate cuts are coming. And if rates go lower, the dollar will likely lose even more value. So investors, they were all preempting that, and all this leads or deepens the US fiscal crisis. Gold prices have come down now because Trump is trying to defuse the China tensions, while the shutdowns obviously can't last forever. So this initial boost to gold is starting to dissipate. And that's why we are witnessing a sudden decline of 6% on the day. Gold is around $4,100, those levels right now. But we have to track where we started out in the year. Now, the plunge is natural, and to be honest, it isn't brutal enough. I want it to collapse even more so that I can buy gold at even cheaper prices. I hate chasing prices, and the best time to accumulate is when everyone is losing their collective marbles. And that's my game plan, that's my own personal playbook. Now, comparing gold's gains versus the dollar index, we can understand why a pullback was always on the cards. Compared to the dollar strength, gold was up more than 60%. If we kept going to 70% or even 100%, then it would be bubble territory short term, and the resulting bars will be even more horrifying. So it's good that the correction has happened now. Now, gold has historically returned between 8 to 10% annually since 1971. So this outperformance of 5 times or even 6 times higher in 6 months is not the norm. Now, I believe there will be a gold revaluation, one where China and even the US have to reach common ground about a new financial system, but we probably aren't there just yet. The underlying driver of gold prices and currency debasement has not changed. We are still trapped in this ridiculous cycle of huge debts and deficits, and this is despite the US taking in record tariff income. According to the CBO, the US federal deficit has exceeded $1.8 trillion in 2025. That's 6% of GDP borrowed this financial year. Only the '08 crisis, the pandemic, and World War II were worse. That's not a good thing. It gets crazier. Interest payments alone rose by over $80 billion, surpassing 1 trillion annually. This is the first time in history, which means it will only get worse unless the Federal Reserve slams down interest rates. But that is a double bind, isn't it? If interest rates comes crashing down, especially during a tariff war, what do you think will happen? Prices go up, including assets. So the writing is on the wall, it's still unchanged. Currency debasement is still the name of the game. It's just that investors globally, they all suddenly woke up to gold at the exact same time. The trade war is still going to force global governments to spend more to survive. China is spending, Europe is spending, and the US government is most definitely spending like no tomorrow. But let me know what you think. Will China keep squeezing US industries? And will Putin really fall for Europe's 12-point plan? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through this economic Armageddon.